early good morning to you. Welcome to the podcast.
Hey, yeah, good evening, I guess. Yes, and thanks for having me on.
I got lots that I want to ask you about today, but I thought we'd start here. Rheinmetall is a defense company that's based in Germany, probably best known for its tanks and other land systems. Now, prior to 2022, looking back, its shares generally traded between, call it 60 and 90 euros. We bought it, call it mid to late 2022, I think for 164 euro when we first purchased. And as we record this podcast today, its shares are currently trading at 1,350 euro. In other words, a remarkable 700% plus return in less than 3 years. And so I'm hoping, can you go back and set the stage for us prior to the invasion of Ukraine? And I guess I'm thinking less about Rheinmetall specifically, although certainly want to come back and talk about that company later, but more just on how the defense industry, probably the world, how it's evolved over those 3 years.
The war started in Ukraine. I think in our international equity strategy, we sense something had changed, like in a big way. And, we also did have some Russian exposure. And so that was also a big warning sign. I think we may have talked about what happened there before. And so there was really a big step change in what was going on in the world. And I told Peter, hey, let me allocate some time to look at the defense sector. Just for some very quick background, I have been very interested in technology and specifically defense technology since I was 8. I've been attending air shows basically ever since I was 8. And, every 2 years there's an air show in Singapore. I kind of know this industry, the products by the back of my hand, but, let me do a bit of work to understand the investment perspective as there is opportunities here that could fit our bottom-up criteria. And so when we started this process after the war, began in days after, we got to understand the sector. And I think the big change that was occurring here was that demand in the defense industry, particularly in Europe, has been constrained ever since the Cold War ended in the 1990s. And we're talking about huge numbers here. So on a budget basis, Europe used to spend about 2.75% of GDP on defense back in the period of the 80s. That fell to a low of about 1.3% of GDP over the past 10 years. And then if you take a look at the actual inventory of equipment or, military equipment or kit, if you look at main battle tanks, in 1992, Europe had 18,941 main battle tanks. And in 2022, it was down to 4,362. That's a 77% drop. For aircraft, it was, 57%. For ships, 40%. You get it. Big declines in inventory.
You're saying that not only are these countries not spending as much as they were over the last 30 years, but they're also drawing down their inventory at the same time.
Yes. Not drawing down, like selling it. I live in Singapore. I'm Singaporean. Singapore bought a bunch of tanks off Germany, I think 20 years ago or 15 years ago. From these numbers that I've just told you, we bought it at fire sale prices. And so just the equipment they have on hand was massively depleted. And so this is the demand perspective. And I think where I'm going to with this, that with a period of low demand, ultimately it resulted in the supply side, the capacity being shut. There was consolidation that was occurring on national levels. And, imagine 30 years of low demand is bad for any industry. So on the supply side or the company side, basically less demand, less supply, more consolidation occurring. And the consolidation is most evident in the land systems, which is from those numbers, which had the most drawdown in inventory. In France, the France and German tank manufacturers are called Nexter and KMW merged in 2015. In Britain, BAE bought over Elvis Vickers, which was another tank or armored vehicle manufacturer. And Rheinmetall bought over part of BAE Land Systems. He did a joint venture with them in 2019. So you can see there was consolidation going on the supply side. And that is very important for the bottom-up thesis because, there is less companies operating in this sector. They are more consolidated. And in the case of land or Rheinmetall, they have consolidated across Europe. They're like probably there's only one or two games in town in Europe when it comes to land systems. And so that was kind of the big picture theme that we realized was going on there, which is very interesting because this is the good setup that you want for wealth creation. It's like constrained supply, and now you have a paradigm shift in demand. And so, that was, I guess, what got us looking at all these names in the start.
Yeah. I mean, it's someone who obviously hasn't been following the defense sector as closely as you have since you were 8. What I seem to remember was just a lot of attention on, call it cyber capabilities, as opposed to the hard on the ground capabilities. And so you're saying that where there's been a lack of demand, but also a lack of supply, investment, development capabilities, it's really been on those harder on the ground systems.
Yes. If you think about it, the last major ground battle was in the Gulf War, 1990s, 91. That was the last time NATO really used their tanks in a big manner. And ever since then, most of the priorities for US, NATO has been on counterinsurgency, so Iraq, Afghanistan, and cyber. So all the hot topics, cybersecurity, drones, those got most of the capital. And I know specifically when it came to ground, what I noticed was that for aircraft, the whole world has kind of like US actually has invested in 5th generation aircraft. For ships, there's been a next iteration of ship. But for ground equipment or land systems, there's actually been no innovation going on since the late 1970s. So that's how bad it was. It's like on multiple levels, be it inventory, technology, R&D, like no one's been innovating. And going back to Rheinmetall, this was the only company that actually was still investing in that dying industry. So while the industry was in the doldrums and consolidating, Rheinmetall they were consolidating the industry and they were still investing in R&D. I think they were spending 80% of their R&D on, self-developed R&D was going into, land systems, and they're trying to build up the next generation of equipment on their own, with their own money. And so that meant they were very, very well positioned to capture what's going on next.
Okay. I do want to come back to that, this concept of next generation, but can we stick or go back to the demand side first? I mean, there's been lots of news with respect to the commitments made, since really Ukraine, but those have ramped up really in the last number of months, just with geopolitics. Can you give us a sense for just what some of those commitments are? Most have probably heard about Germany's $1 trillion commitment over the next 10 to 12 years in infrastructure and defense. But as you add up and sort of look at all the different countries that are seemingly increasing their spending on defense, what does that demand side look like today?
Okay, so on the demand side, it's a bit tricky. I think there is Germany, which has the fiscal ability to spend. And so whatever they say they're going to do, I think is much easier. They don't have to worry too much about how they're going to fund it. Country, so you on a euro level, I think there's like a 150 billion euro program that's been talked about. Although I think I just read yesterday there was pushback by some of the countries because Italy, France, or one other country, they don't want to borrow. Like they want to use their fiscal headroom to borrow for this. So there's still debate and uncertainty along how exactly are they going to fund it. And so I would say, unfortunately, not all of Europe is equal when it comes to this theme. And this is something that we have talked about internally, is that, in general, I think the willingness to spend is there across all politicians. People see the threat, but the ability to spend is an entirely different story. And in that regard, Germany probably with, most fiscal headroom, most ability to spend. And then when it comes to the other countries in Europe, there's still question marks at the moment around whether they can spend. Now, if we dive deeper and if you want to know what will they spend on, that is actually a whole different topic. you can let me know if you want me to kind of go into the detail.
Yeah, no, definitely. Let's go there. And I thought I'd think about this from the perspective of, well, you talked about how inventories have come way down, but then also I imagine, if you're saying that the last major NATO involvement was the Gulf War, I imagine the nature of war has evolved as well in terms of capabilities, what's required. And so I'm just curious, what has Ukraine taught us about capability gaps and what's needed? Like, where is this capital ultimately going?
I would say not just Ukraine, but we can also add what's going on in the Middle East. You have Yemen, because these are active conflict zones. And what's happened in the past 5 years has been a couple of things. So firstly, the land system. So this is specific for Ukraine and Europe. You need more infantry fighting vehicles, tanks, and artillery. And, the initial pushback within the team when I brought up Rheinmetall was that, hey, we're seeing all these videos of drones blowing up Russian tanks in the early days of the war. Isn't armor obsolete? And there's two things. You still need armor to capture new ground. And so unless you want a stalemate war, you won't need armor. But if you want to go on the offense, you want to capture new ground, it's still better to have your infantry. We put them in an infantry fighting vehicle. There's explosions going all around, but they're still protected, and you still need them to kind of capture new ground. So you need them for offensive maneuver capabilities. And then when it comes to the drones, this gets a lot of attention in the media. But you must remember that this is a new system that was introduced into the battlefield. It will force an evolutionary response, just like everything that has gone on in warfare over the past thousands of years. So because of this, I'm going to say tanks are not obsolete yet. You think of the introduction of the machine gun back in World War I. That did not make troops or soldiers obsolete. The introduction of the surface-to-air missile system did not make aircraft obsolete. And so, just like how drones have been introduced into the picture, what will happen is that there will be a change in military doctrine, training, techniques, protocol, and technology. This will evolve to counter the threat. And in fact, this is also the opportunity for some of our portfolio companies because they are well positioned in this counter drone capabilities. So that's number one. Number two, in a related point, is gun-based SHORAD. So this SHORAD stands for Short Range Air Defense, and it's a term that is going to be very talked about over the next 10 or 20 years. Because specifically, I think you would know that drones are very cheap. You fire $1 million missile, it doesn't make any economic sense. What the most effective kinetic solution to downing a drone in Ukraine right now is gun-based systems. It's actually called a Gepard, which is a system made by Rheinmetall back in the 70s, if I recall. They have a much newer version that's selling like hotcake, but gun-based short-range air defense or gun-based SHORAD, that is a capability gap that is occurring. And the irony is that NATO and most Western countries actually decommissioned these gun-based systems about 20 years ago because they thought, hey, in the era of fighter aircraft, these gun systems are too slow. But it turns out these gun-based anti-aircraft systems are perfect for destroying slower moving but more harder to detect drones. And it's more cost effective. You're talking about $3,000 for a burst of ammunition to down a $10,000 drone or something like that.
So if I'm understanding right, you're saying that pretty much every tank out there is going to be needed to be outfitted with this kind of technology.
Not every tank. So what is happening is that there are specific tanks. So you can go and Google the Gepard and in fact, I actually went to Italy and saw the production lines for the Sky Ranger. It is a specific kind of armored vehicle that is purpose built. It has a radar, it has a gun, and it will protect the other tanks around it. So it provides air defense coverage on a localized manner. This is going to be a very big team, and I think that militaries are still scrambling to figure out how much of these do we need to keep our forces protected. Number three is the restocking of ammunition. Germany used to operate on 7 days inventory of war ammunition. Afterwards, they've seen what's going on in Ukraine. NATO is likely to go to 30 days at least. There's talk of 45 or even 60. I'm not sure how realistic that is. There is a huge restocking need. in Europe. I'm going to finish here. Two more is the next one is ground-based air defense. So drones get a lot of attention in the media, but another important theme is that we have entered the missile age. In Ukraine, Yemen, Iran, ballistic missiles have become very proliferated. Ballistic missile technology used to be something for superpowers, but what we've seen now is that third world countries are actually able to access ballistic missiles. And so what this results in is that you actually need more missile-based air defense. And you also need more interceptor missiles. So you need a more magazine depth, as they call it, and you need more systems. And we have companies in our portfolio that basically are very geared towards this ground-based air defense systems. And then the last one, which I won't spend too much time, is loitering munition and drones. I think this is very well covered in the media. Everyone talks about this. So, it is game changing. I think militaries will need more of this.
Your comment on just the current production capacity relative to the need, depending on how many days of, I can't remember what you called it, but the number of days of
inventory
that Europe would like to have. Like, that's a massive gap. And I assume there's a desire to get there more quickly. I read recently that, different facilities were being repurposed for, I think I read recently that Rheinmetall had bought like a car manufacturing plant and was basically converting into something that could help them in terms of their business. Are we seeing a lot of that too in Europe?
Yes, I think there is a very big push to ramp up. But the problem specifically for ammunition is that the supply chain or the value chain itself is just not ready. Remember, 30 years of underinvestment does not get solved or fixed in 3 years. Over the past 10 years, they didn't really stop investing in the sector. They have the latest production technology when it comes to ammunition. So they are able to ramp up faster than the rest and at a cost structure that's better than their peers. So when I spoke to Armin, who is the CEO of Rheinmetall, he told me last year that, they would bid for these ammunition contracts with Germany, and he got a call from, the defense minister thanking him that, hey, thank you for providing the lowest price. So it's not that they're price gouging the customer, they actually provided the lowest price. And despite that, they're still able to do good margins. And the why behind that is because they have kept their production technology up to date, as opposed to peers who have not been investing. And so they don't have the same cost structure. They don't have the same ability to ramp as Rheinmetall. And so Rheinmetall, I think, is something like 50% or almost 50% of Europe's 155 mm ammunition production capacity, which is huge. And so, there is that demand, but just remember, 30 years of underinvestment, supply chains are just not ready. On a side note, we do own a company in Korea, and Korea has had their supply chain running hot for basically forever because they're technically still at war with their neighbor. So that's why you would notice Korea has won some deals in Europe because they're just able to deliver much faster and also cheaper because of their hot supply chain, and having a value chain all in the country means that lower cost.
I noticed you mentioned Armin Paperger. Is that his name?
Yes, Armin Paperger.
The CEO of Rheinmetall. Did you speak to him in person?
Yes, I met him. I met him last year in the investor day. I was at the same dinner table as him. I met him again last week, actually, when I was in London. He's in high demand, though. I would say there's a lot of investor interest. I wanted to get a one-on-one meeting. This time I didn't get a one-on-one meeting.
I've heard he's in high demand for other reasons too. Like, how many bodyguards did you have to get through to get in? For listeners who may not know, I mean, he's been targeted by Russia, allegedly, just given the importance of his role in Europe's defense.
This is a serious thing. Like, when I went for the investor day, I actually was like considering asking VJ if I should get risk pay. The Russians are known to be trying to assassinate him, and when they, like, for the investor day, they don't tell you where is the dinner going to be. You don't know. You meet at the hotel lobby. You go onto a bus and you're not told where you're going to. Bus arrives at a destination. There's people with MP5 submachine guns outside, police cars and all that. He gets the same level of security as the German chancellor. So But this is because he is so impactful. Like he is, if there's one company that is doing the most in helping Europe rearm, specifically for the capability gaps, I would say it's Rheinmetall. And so that's why he's the target.
Speaks to the competitive advantage that that the company has at the moment. Josh, I want to run through a couple of other themes that I've heard you speak about with respect to defense. And in no particular order, I'd love to just get your quick thoughts on some of these, more for my own education, but hopefully also for those of the listeners. When you talk about the sales cycles involved,
Yes.
I imagine they're quite long.
Yes, indeed. So the sales cycles, and maybe I'll start off from actually political statements, because I think this is very helpful in the current environment. Politicians are talking about increasing defense spend. And a couple of weeks ago, the Thales CEO mentioned this, kind of data point that I thought was very useful. It takes about 2 years, go from a policy statement to an order being placed by the military. So that's just from policy to order. And then, from my understanding, it can take anywhere from 6 months, 5 years for that order to translate into revenue. So it really depends on the type of equipment. If you're talking about defense electronics, it may be a bit faster. If you're talking about platforms like buying a fighter aircraft or a missile system, there's just longer wait time at the moment. And, it takes about maybe 3 to 5 years for those to come into to hit your revenue. So we are talking long sales cycles, and then the contracts themselves are very long. Like when you have when I say platform, it means like a fighter aircraft or a tank. That's called a platform. When you have a platform, the production run's going to be like 10, 15 years.
And this comes back to much like a software product. Everyone's trained on the system. It's integrated. It's like there's a lot to replace it.
On a high level, if we think about moats in the business, there is an installed base effect for a very simple reason. And, in Singapore, actually, we have to do military service. And so kind of get to do some scuttlebutt on this occasionally. This is not like shopping for goods in Walmart or Costco. You don't want to buy a few different kind of tanks. Firstly, because from a training perspective, you want to make a training of your personnel easier. And number two is from a military logistics perspective, less SKUs or less type of components is just more efficient for the logistics supply chain. And in a wartime, you don't want to be running 3 different engines for 3 different type of tanks, because if you need to get that to the battlefield, it's really very complicated how you think of your inventory management. And so militaries tend to use just 1 or 2 types of a product. They very rarely will buy multiple kind of SKUs. The exception right now is Ukraine, and also I think Poland. And that's the exception because of urgency. That Ukraine just, they're being donated weapons. They have no choice but to accept it. Poland also, they just couldn't get their tanks fast enough. And so they ended up buying American, they have German tanks, and then they're going to buy Korean too. So they have quite a big assortment, but that is not the norm.
There's like a strategic reason why there should be particular concentrations within a lot of these providers.
Yes. And so if you are think about it, remember I told you like some of the platforms have not been updated since the 70s in Europe. So the Leopard tank is Germany's like main battle tank, and it's very popular and sold across Europe. That was made by Rheinmetall and a company called KMW, which is now KNDS. This tank is sold across Europe. So what happens now is that when people need, there is an urgency, there's demand, they're going to buy more of the same tank. And so there is some level of visibility that because they have an installed base across Europe, they're very likely to get the orders.
I think a lot of the companies that we've been talking about would be determined to be prime contractors. Can you talk about the difference between who's a prime, who's not, and what that means in terms of orders, perhaps related to what we just talked about?
In the portfolio, actually, I would say that maybe not all companies are prime, because like Thales is defense electronics. They are making the most important components that go into like a fighter jet, but the prime would be Dassault, which is like the fighter jet manufacturer itself. A similar story for I think some of other portfolio names where they are actually not doing the platform itself. The Rheinmetall probably you could say is the prime. They previously were not the prime. So Rheinmetall used to have their DNA in the fire control systems of tanks. And basically all NATO tanks except for France uses a Rheinmetall design gun. And then fire control, most of Europe is using Rheinmetall. They've moved from a subsystem manufacturer and now they're selling their own tanks under their own name. So they've become a prime. But in general, maybe you get slightly lower margins as a prime. But I think what's important is that building the whole product from scratch. And so you have the prime that is the main company that is in charge of assembling the product and putting everything together. And then you have the subcontractors, which build different components. A lot of the companies that we own, like Leonardo, Thales, they are doing defense electronics, which is basically the heart and it's a mind of a lot of these systems. It's the most important, the central nervous system, if you want to call it. And so those are mission critical elements of military platforms. And it's becoming more important because as the world becomes more digitized, etc., that brains of the equipment is just more and more mission critical.
So far, Josh, we've talked about mainly European companies. I know you mentioned a South Korean one. Can I ask about the US? The US spends the most
Yes.
on its military. How do the US defense players play into all this?
The US has the most advanced weapons on earth. They have, as you mentioned, they've been spending I think way more than the next 2 or 3 countries combined on defense. So in terms of technology capabilities, they are leading the world. They're the only Western country to have a 5th generation fighter jet. I think everyone else has failed to invest or are only starting to invest now, but they have it in operation, is flying. So they're just one step ahead of basically everyone when it comes to the highest end kit, anti-missile technology. Just 2 days ago, I think they were testing ability to intercept hypersonic gliding vehicles, which is real rocket science here. So technology is there, I think, but you have to separate that from the investment perspective. And perhaps why I didn't ring the bell previously on US companies, I'm not saying that I won't, I could change my mind here, is that if you think about it, what's the odds of US spending more money on defense going forward versus, say, Europe? And I think this is a good contrast to show is that we haven't owned a single US defense company so far. Because if you think of the difference in outlook, at least 2 or 3 years ago, US is spending 600-700 billion on defense, but the odds of that going up, having a step change is quite low versus, say, Europe that was underspending, and then you have kind of that delta in long-term growth. And so I think the demand picture, if you point the investor hat, is that, they got they have the best kit out there, but the government is the biggest customer and they're just spending a lot. And the other important thing to mention about US companies from a moat perspective is that the US is a big customer, but when you sell domestically, your margins tend to be lower. In most cases, the US government owns the IP that I've talked about. So yes, they've developed the most advanced fighter jet or missile system, but the IP is owned by the government. When you sell to the DoD, you're not going to get whatever price you want. It's basically a cost plus kind of basis. And so domestic sales, is kind of, you could say, capped profitability. And then when it comes to export of US equipment, US has a system called FMS, Foreign Military Sales, and it's government to government discussions on the pricing. And so effectively, the companies themselves don't really get the full benefit of selling overseas as if they were the ones selling the product. This is quite different from some of the companies in our portfolio. LIG next one is surface to air missile precision sensor manufacturing company. The fun story, the backstory is that in the 1990s, South Korea used to own Russian government debt. Russia couldn't afford to pay. And so what they did in return was to transfer their IP of their most advanced anti-ballistic missile technology and anti-aircraft technology. It's called the S-300 and maybe the S-400. This is all like partly classified. I think it's all rumors here, but let's just go with it. It was transferred to the Koreans.
You're on Signal, I guess, Josh.
Yeah. No, not on Signal. This is just like, I do like to research into it. I really go into the weeds, and it's a personal passion or interest here. So some of this IP was transferred to the South Koreans. They reverse engineer it, so there's no more Russian DNA in the IP anymore. They totally own all of this IP at this point. And the significance of this is that the amount of R&D you have to spend on anti-ballistic missile technology is actually very, very high. It's something that only superpowers can afford. Just to put things in perspective, the science behind this is absolutely mind-blowing. Ballistic missiles travel at their fastest around Mach 25 or 5 to 6 kilometers a second. And these systems have to hit that moving target. People talk about shooting a bullet with a bullet. A bullet travels at like 1 km a second. So this is way more advanced than that. And they have some of this capability to actually do some of this. And so it's very advanced capabilities that sit in this company. Historically, if you look at the numbers, I looked at that in 2023. Historically, they've been selling domestically. So to the point I just made, domestic sales, low margin, it's like high single digit operating margin. ROIC is also probably like about 7-8% from my calculations. But when they sell overseas, they get to set whatever price they want. Now, I'm not going to give the numbers here because I don't want to destroy their prospects of overseas sales. But from my perspective, their overseas sales is highly wealth creating. I did the analysis of the ROIC, and it's quite different from when they're selling domestically. And so it's not just them. I think a lot of if you look at Europe is a fragmented country. So you sell to Germany, probably you have to accept slightly lower margins. But when you sell, if Rheinmetall is selling abroad, I would expect them to get better margins. Same for Thales. You sell to France, lower margins. Outside of France, higher margins. That's the nuance associated with perhaps non-American defense companies that I liked at least a couple of years ago. Now, I'm not saying US companies are uninvestable. I think at some point of time, I do want to look at them in detail. It's all about the valuation, right? There's been quite a big gap going on here. So
one more theme I wanted to ask you about before we get to valuations. And it was just, you mentioned next generation technology versus platforms that might be more mature. To a layperson, the profitability might be in the latest technology, but I think you've got a different view.
Yes. Actually, I don't like new technology, like from an investor perspective. As a enthusiast in this, I love reading about new technologies. So very fun, and it's like, wow, really mind blowing. But there's execution risk and there is development risk with this, because typically when you have a new technology, we're trying to, like, militaries will want the latest advances in their latest generation of equipment. And that means R&D risk to begin with. You can go and read up on. Basically, every defense contractor at some point in their history would have some sort of blow up in terms of a new project gone bad. It could be the prime or the subprime, but basically it's prime or the subcontractor. But something just like has development delays, leads to write downs, and that's the development risk. And number two is the execution risk, because if you're building something for the first time, you may not be able to put it together at the price that you kind of quoted your customers. So new platforms tend to carry higher risk, and it's the old platforms, the old boring, mature platforms that actually have lower risk, because you've been building this for 20 years. What's the odds that you're going to misprice the contract? Probably very low. And in fact, there's probably like some sort of learning curve effect where you're just getting better and better at building it. So that is actually a very important mental model when thinking about moats and profitability in this industry.
Can we have the valuation conversation?
Okay.
Start of the podcast, just talking about how Rheinmetall and a lot of these companies have just done remarkably well over the last several years in terms of returns for shareholders. How do you square the valuations today, especially given your comments around okay, well, maybe Germany can pay, but maybe a lot of these commitments might not actually come through.
A good stock or a good story can be a bad investment if you're buying it at the wrong price. And I unfortunately think that at the current levels, some of the valuations are reaching the P90 range of our our DCS, our IRR. So you can say they're more stretched at the moment. So yeah, when I think about risk, not all companies are the same. Rheinmetall, if we put valuation aside for a bit and just think of the visibility of growth, I think they have in Europe at least, they have the highest visibility there because they're levered towards Germany.
Visibility meaning predictability of the cash flows that are being anticipated in the future.
Yes. Because of the number one, Germany is like their major customer. Number two, their equipment is in high demand, short cycle. I mean, unless Europe decides that, hey, we no longer need to restock and this Russian threat is over, then that comes into question. But more or less, I think because of the importance of their products, because of the depth of underinvestment in land systems, the visibility of growth, there is probably the most certain of the European defense companies that we own. But the problem is, I think it's at this point quite well known. And stock has gone up 800% since we bought it. So, so in our models, it is, it's above our fair value range, probably towards the higher end of that DCS spectrum. And yeah, so that is this investing is that, yeah, good company, good business, good story, priced in, probably yes at this point.
I know we've been trimming, quite often, actually.
Yes. So we have been
this come up too, just to manage the weight.
Yeah, just risk management. So and that's it. There is upside option. So we do our base case scenario, but Rheinmetall still has upside options that are not fully priced in, and that's why we still are keeping it in the portfolio because there is a huge US program that could, I would say almost double their order book again. Because the US wants to build a new infantry fighting vehicle. This is like a $50 billion program or even larger. Sorry, I don't have the number offhand. But there are upside options that could occur. And number two would be the SHORAD systems that I talked about. Remember, I was talking about gun-based SHORAD. And my understanding is that military, it's very important to understand this, that military doctrine takes years to change. So going back to the sales cycle, I gave you the company perspective. But from the customer perspective, actually to underwrite new capabilities, that sometimes takes 5 years because they need to figure out, hey, what do we do with this system? How do we employ them in our tactics and procedure? And that's actually your officers have to go to a military school to actually understand the new tactics and all that. And so one hypothesis I have is that, yeah, there's been some orders placed for these systems right now, but as the drone threat becomes more clear and evident, then the number of these systems they need to cover or their flanks would actually be more than whatever's on order today. So those are some of the upside options that are not embedded in our base model, but that is keeping us, still invested even at the current valuations.
I'm sure there are listeners out there, myself included, by the way, who would think, well, gosh, I get the demand, I get the supply side, but from an economic perspective, isn't this highly unproductive spending? Meaning you're building stuff that either blows other things up, gets stored in a warehouse, and has an impact on human life. And so how do you think about that, Josh?
That's a very important question for us to address. So I think I have a bit of a different perspective of this for quite some time because of myself being in Singapore. And so for the listener, Singapore has mandatory military service. At the age of 18, all males have to do 2 years of military service. And, Singapore is a very peaceful country. We have not gone to war. So why do we need this? It's to keep our democracy safe. Like the best deterrent sometimes is just having the systems, having the soldiers in place so that people don't try to test the boundaries. We believe strongly in diplomacy, but you need that deterrence to ensure that your diplomacy as bark, and to also ensure that if bad actors want to go across the line, they will think twice. And that's been Singapore's mentality. As a teenager, when I was forced to do military service, I can honestly tell you I did not like the idea. But now, when like 18 years later, I'm a bit wiser, and you look at what's going on in the world, and it's actually very, very important that countries have the ability to defend themselves. We talk about democracy and being able to to say what you want freely. That would not be possible in a lot of these countries that have been acting as the aggressor. So if you were talking about keeping our society safe, keeping our way of life, countries need to spend on defense to make sure that their population, their way of life is protected. And I think that's really it, is that, deterrence is about deterrence. It's not about trying to, unfortunately, humanity has been waging war for basically, the whole of history. So, it would be nice if we stopped, but the base rate is that it's quite unlikely. There's always going to be some sort of bad actor out there. And so you do need to defend yourself. And I think what's going on in the US, unfortunately, US is kind of withdrawing from the rest of the world. At least in Singapore, we used to view them as like the policemen of the world. To some extent, they've kind of hung up their hats, and they're kind of walking away from that responsibility. And so that means the world, unfortunately, is becoming a more dangerous place. And so countries have to fend for themselves. And, that's actually part of the, going back to our European names, one new theme that was coming out of this is strategic autonomy, because the Europeans are realizing that they need to be less reliant on the US, and they need to defend themselves. I won't go into too much detail. We spoke a lot about this, but yeah, I think like that's kind of the theme, right? It's like, hey, countries need to be well defended deterrents.
Well, Josh, that sounds like a good place to end.
Yes.
Very well said with respect to, I'm sure your country appreciates your service. We have a number of people at Moore who have served. In fact, our founder, Commander Moore, served in World War II. And so it does sound like a decent place to end. Thanks so much for the discussion, Josh, and hope to see you again back on the podcast soon.
Yes, really enjoyed it. Thanks a lot.